Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So this is the last video on the topic time series analysis. Last few problems are left and those problems I'm going to complete in this video. So far I have completed so many problems on this topic of time series analysis. If you are continuously watching all the videos, definitely by this time you will get a lot of command on this topic of time series analysis. We have different types of problems regarding calculation of secular trend, calculation of seasonal variations. So many different types of problems I have already solved in the previous videos. So if you have not watched that earlier videos, it will be difficult for you to understand now. So I suggest you to go to the playlist of my channel. Select the subject Business Statistics 2. Select the topic time series analysis videos. Start watching from beginning, introduction part, then starting videos are very important. So if you are interested if you are interested to want a complete command on the subject, so watch till the end of the video. Don't skip in between and don't join in between. The next problem I am going to explain you is the 9th problem, and before watching the problem, I expect my readers to have a printout of the problems which are given in the link under my description. So 9th problem I am reading out. Calculate seasonal indices from the following data. The 4 years data is given 1987, 88, 89, 90. And for each of the year, 4 quarters are given, Q1, Q2, Q3, Q4. Already the values are given for third quarter. For third quarter, 85.21. For 1987. For 1987, we don't have the first quarter and second quarter values. We are given the values for third quarter 85.21, fourth quarter 90.25. For 1988 and 89, we have the values of all the 4 quarters. For 1990, we are given the values of first quarter and second quarter. We don't have any value for the third quarter and fourth quarter. We have to find out the seasonal indices. Now see, calculation of seasonal indices, year 87, 88, 89, 90, quarter 1, 2, 3, 4. So whatever values data is given in the problem, same data I have copied here. Now I want the total. Total of first quarter, total of second, third, fourth. This total is of 3 values, 1, 2, 3. So if you want the average divided by 3, the total 345.71 divided by 3, you will get 115.24. Similarly, the total of second quarter divided by 3, you will get 98.52. This average are the seasonal indices. The average are the seasonal indices. Now you calculate the total of these averages, you must get 400. If you are getting 400, then the solution will be over. That means these average values are the seasonal indices. But here when we calculate the total, it is coming to 397.58. We are not getting 400. We are not getting 400. So in order to make it 400, by interpolation we will find out the seasonal indices. That is adjusted seasonal indices. So here adjusted seasonal indices are, what is the index, seasonal index we got for quarter 1? 115.24. So 115.24 divided by 397.58 into 400. Into 400. So 115.24 divided by 397.58 into 400. You will get 115.94. This is the adjusted seasonal index for the quarter 1. Now quarter 2, similar calculations. What is the index here? 98.52 divided by 397.58 into 400. 99.12. Third quarter, 86.48 divided by 397.58 into 400, 87.01. Last one, 97.34 divided by 397.58 into 400, 97.93. If you add up this adjusted seasonal index, definitely you will get 400. The total will be 400. So this is the problem on calculation of seasonal indices. Next problem. Problem number 10. See the 10th problem. From the following relatives, find the link relative. Year 1998, 99, 2000, 1, 2, 3. So 6 years data is given. Price relatives are given. we have to convert these price relatives into link relative. So this is the first problem on which we are applying link relative method. There are 4 methods in seasonal indices. First, simple average method. Second, percentage to trend method or ratio to trend method. Third one, ratio to moving averages method. Last one, link relative method. So the last few problems I am going to do on link relative method. So what do you mean by link relative? I have given the definition here. If a given season's data is expressed as a percentage of previous season's data, then such percentage is called link relative of that season. That means we are linking to the previous year. We are having current year data, we are having previous year data. So we are calculating what is the percentage of current year data over previous year data. So current year data divided by previous year data into 100, you will get the link relative. So in our problem, calculation of link relative, years are given 1998 to 2003 and price relatives are given. Price relatives are given. So first year, the price relative and link relative both will be same. First year. So what is the price relative of first year? 150. So link relative will also be 150. 150 divided by 150 into 100. So that is 100. So first year, 150 divided by 150. We assume the price relative of the previous year is 150. So 150 by 150 into 100, 100 will be the link relative first year. Now second year. What is the price relative of second year? 210. What is the price relative of previous year? 150. So 210 divided by 150 into 100, 140. Similarly, 220 divided by 120 into 100, 104.76. 250 divided by 120 into 100, 113.64. 260 divided by 250 into 100, 104. The last one, 280 divided by 260 into 100, 107.69. These are called link relatives. That's it. So this is the 10th problem. Now I am going to read out the 11th problem. Deseasonalize the following data using multiplicative model. Deseasonalize. Then say quarter 1, 2, 3, 4, 4 quarters data is given. Sales. First quarter sales are 65.4 and the seasonal index is 148. Second quarter sales 25.2 and seasonal index 124. Third quarter 23.7 are the sales, 78 seasonal index. Last fourth quarter 21.4 is the sale and seasonal index 50. Now we have to deseasonalize the sales data. How to deseasonalize? See here. Computation of deseasonalized value. So quarter 1, 2, 3, 4. Sales value rupees in thousands, 65.4. These are the values of sales given. Seasonal indexes are given in the problem. Now we have to deseasonalize. How to find out the deseasonalized value? Take the actual value divided by seasonal index into 100. So actual value divided by seasonal index into 100. What is the actual value? 65.4 divided by 148 into 100. 44.20 is the deseasonalized value. So deseasonalized value is 44.20. 44.20. Then here sales 25.2. 25.2 divided by 124 into 100, 20.32. Next one 23.7 divided by 78 into 100, 30.38. 21.4 divided by 50 into 100, 42.80. These are the deseasonalized sales value. That's it. Next problem 12. The seasonal indices of the sale of garments of a particular type are given below. Quarter 1, 2, 3, 4. Seasonal indexes are given 98, 89, 83, 130. Seasonal index for each quarter. Next page it is given. If the total sales in the first quarter of the year was worth rupees 10,000. The actual sales, total sales of the first quarter are 10,000. Find how much worth of garments of the type should be kept in stock to meet the demand in each of the remaining quarters. Remaining quarters means second, third, fourth quarter. So we have to find out what would be the stock for the second, third, fourth quarter. In the first quarter, the actual sales are 10,000. Now see, The total actual sales in the first quarter are 10,000. That is given in the problem. Since the seasonal index for the first quarter is 98, so the seasonal effect is 98 by 100, 0.98. The deseasonalized sales for the first quarter would be 10,000 by 0.98 is 10,204.08. See, we have converted the actual sales into deseasonalized sales. So what is the index number of the first quarter? 98. So we can take the seasonal effect as 98 divided by 100, 0.98. 0.98 is the deseasonalized effect. Now what is the deseasonalized value, sales value of the first quarter? So total sales divided by 0.98, 10,204. This is the deseasonalized value. On the basis of the sales of garment, assuming a multiplicative model, the sales of the remaining quarter will be calculated as follows. Remaining quarter, second, third, fourth quarter. So quarter, second, third, fourth. Seasonal index are given 89, 83, 130. So seasonal effect will be 89 by 100. 89 by 100, 0.89. 83 by 100, 0.83. 130 by 100, 1.30. Now simply you have to find out the estimated sales to be kept in stock. That is 10,204.08. What is this 10,204.08? This is the deseasonalized sales of the first quarter. Deseasonalized sales of the first quarter. Now we multiply 10,204.08 into 0.89, 9,081.63. This is the estimated sales for the second quarter. For third quarter, 10,204.08 into 0.83, 8,469.39. This is the estimated sales for the third quarter. Fourth quarter, 10,204.08 into 1.30, 13,265.30. These are the estimated sales for the fourth quarter. That's all. Next, 13th problem. See the 13th one. Given below are the seasonal indices of sales of a ready-made garments dealer. Quarter 1, 2, 3, 4. Seasonal index are 80, 90, 110, 120. If the total sales in the first quarter is expected to be 20,000, find the value of stock to be kept in store in each of the remaining quarters. So total sales in the first quarter are 20,000. And what is the index of the first quarter? Seasonal index of the first quarter is 80. 20,000 sales and seasonal index 80. Now we want to find out what would be the sales in the second quarter according to index number, seasonal index number. So for seasonal index of quarter 1, 80, the actual sales are 20,000. For seasonal index of quarter 2 is 90. It is given in the problem. Second quarter, the seasonal index is 90. So for 90, how much would be the sales? So 90 by 80 into 20,000, 22,500 would be the sales in the second quarter. Similarly, in third quarter, for seasonal index of 80 in the first quarter, the sales are 20,000. For seasonal index of third quarter is 110. 110. How much would be the sales? So 110 by 80 into 20,000, 27,500 is the sales of the third quarter. Last one, fourth quarter. Again similar, for seasonal index of quarter 1, 80, sales are 20,000. For seasonal index of Q4, fourth quarter, it is not Q3, it is Q4, 120. 120 is the seasonal index of fourth quarter. How much would be the sales? 120 by 80 into 20,000, 30,000 is the expected sales of the fourth quarter. So this is the end of problem number 13. Come on, see the next problem. Problem number 14. The seasonal indices of the sales of ready-made garments in a store are given below. So seasonal index is given for each of the quarter. January to March, first quarter, 98 is the index. April to June, second quarter, the index number is 90. Third quarter, July to September, 82. And last October to December, last quarter, 130. So seasonal index is given for the first quarter, second quarter, third, fourth. If the total sales of garments in the first quarter is worth rupees 1 lakh, the sales of the first quarter is 1 lakh. Determine how much worth of garment of this type should be kept in stock to meet the demand in each of the remaining 3 quarters, just like the previous problem. We are given the sales of the first quarter and we have to find out how much would be the estimated sales for the second quarter, third quarter, fourth quarter, based on the seasonal indices. The first quarter, what is the index number given? 98. See here, total sales of the first quarter 1 lakh, and seasonal index of the first quarter is 98. So estimated sales for second quarter, third quarter, fourth quarter we have to find out. So we can write like this: for seasonal index of Q1 98, first quarter index number 98, how much is the sales? 1 lakh. For seasonal index of second quarter 90, it is given in the problem. The second quarter index number is 90. For 90, how much would be the sales? So 90 divided by 98 into 1 lakh, 91,837. This should be the sales in the second quarter. Now third quarter. For seasonal index of first quarter 98, sales are 1 lakh. For seasonal index of third quarter Q3 82, it is given in the problem. 82 is the index of the third quarter. How much would be the sales? So 82 by 98 into 1 lakh, 83,673. This should be the sales in the third quarter. Fourth quarter. For seasonal index of first quarter 98, sales are 1 lakh. For seasonal index of fourth quarter 130, how much? 130 is given in the problem. So 130 by 98 into 1 lakh, 1,32,653. These are the expected sales for the fourth quarter. That's all. Next, 15th problem. The seasonal indices for November and December 2003 were 140 and 190 for woolen products. For woolen products, the seasonal index for November is 140 and for December it is 190. The sales of woolen garments in a shop rose from 80,000 in November to 95,000 in December. The shop proprietor was not satisfied with this rise. Why? So the shop owner says that woolen cloth sales have risen from 80,000 to 90,000. In November, the sales are 80,000. In December, the sales are 95,000. The sales have increased from 80,000 to 95,000. But the owner is not satisfied with this increase. He says the sales should be much more than 95,000 in December. Why? Because the index number 140 to 190. Index number rose from 140 to 190. He is not satisfied. Now we have to explain the reason why he is not satisfied. For November 140, the index of November is 140. The sales are 80,000. It is given in the problem. The actual sales are 80,000 in the month of November when the index number was 140. And the index number for December, it is 190. So how much should be the sales? So according to seasonal index, how much should be the sales of December? So 190 by 140 into 80,000, it comes to 1,08,571. So if we go by index numbers, seasonal index, the actual sales of December should have been 1,08,571. As per the seasonal index, the sales should have been rupees 1,08,571. But the actual sales of December was only 95,000. So according to seasonal index, the sales should be 1,08,000. But actual sales of December, it is only 95,000. That's why the shop owner, the proprietor, is not satisfied with the performance. He says the sales should have been 1,08,000. But actual sales has increased only to 95,000. That is the reason why the owner, the proprietor, is not satisfied with the performance of the company. That's it. Now, 16th problem. The sale of a company rise from 60,000 in the month of August to 69,000 in the month of September, just like the previous problem. August sales are 60,000 and September sales are 69,000 actual sales. The seasonal indices for these 2 months are 105 and 140 respectively. August seasonal index 105, September seasonal index 140. The owner of the company was not at all satisfied with the rise of sale in the month of September by 9,000. Only 9,000 increased. August 60,000, September 69,000. Only 9,000 rupees sales have increased in the month of September. Whereas index number have increased from 105 to 140. He expected much more because of seasonal index of that month. What was his estimate of sales for the month of September? The owner says the sales should have been more than 9,000. Increase should be more than 9,000. But the sales actually have increased only by 9,000. 60,000 to 69,000. Now what should have been the sales according to index number? For August seasonal index 105, the sales are 60,000. For September, the seasonal index is 140. How much would be the sales? So 140 by 105 into 60,000, 80,000. The actual sales in September should have been 80,000 if we go by seasonal index. Whereas actual sales of September was only 69,000. As per the seasonal index, the sales of September should be 80,000. But actual sales of September is only 69,000. Hence, the owner is not satisfied with the performance of the company. So, if we go by seasonal index, 80,000. But actual sales only 69,000. That's why the owner is not satisfied with the performance of the company. Next, 17th problem. Deseasonalize the following data using suitable method. Here months are given January, February, March, April, May, June. 6 months cash balance is given. Cash balance of a bank rupees in lakhs. 360, 400, 550, 360, 350, 550. Seasonal indices are given 120, 80, 110, 90, 70, 100. We have to deseasonalize the following data using this seasonal index. Now see here, deseasonalize the cash balance of the bank. So first column I have taken the month January to June. Second, cash balance in the bank rupees in lakhs, that is also given in the problem. Seasonal index is given. Now we have to deseasonalize. So how to deseasonalize? The actual value 360 divided by seasonal index into 100. So 360 divided by 120 into 100. 300 is the deseasonalized value of cash balance. Similarly for February, 400 divided by 80 into 100, 500. 550 divided by 110 into 100, 500. Similarly 360 divided by 90 into 100, 400. 350 by 70 into 100, 500. 550 divided by 100 into 100, 550. So these values are the deseasonalized value. Actual value divided by seasonal index into 100. That's it. Last and final problem, that is problem number 18th. The seasonal indices of sales of a firm are as under. Months are given January, February, March up to December. 12 months are given. For every month, seasonal index is given 106, 105, 101, 104, 98, like that. Next page. If the firm is expecting average monthly sales of 42 lakhs during 1986, estimate the sales of individual months of 1986. Individual months sales we have to find out. Now, estimated sales of each month during 1986, rupees in thousands. Actually, rupees 42 lakhs are given. So we remove 3 zeros. So instead of 42 lakhs, we'll take 4200. 3 zeros we have ignored, right? For our calculations purpose. The month from January to December, average monthly sales are 42 lakhs. 3 zeros you ignore, take only 4200. Rupees in lakhs we have written. Seasonal index. Seasonal index are given 106. So we'll take seasonal effect. So 106 divided by 100 will get 1.06. 106 divided by 100 will be at 1.06. Now you multiply 4200 into 1.06. Estimated sales are 4452. 4452 is the estimated sales. Similarly, 4200 into 1.05, 4410. 4200 into 1.01, 4242. Like this, you multiply the average monthly sales into seasonal index, will get estimated sales for all the months from January to December. That's all. So 18 problems we have completed on time series analysis. So briefly we'll recap the points what we have done in this topic of time series analysis. First video I have explained the complete theory regarding time series analysis. what is time series analysis, what are the objectives of time series analysis, what is the utility of time series analysis, and what are the components of time series analysis. Secular trend, seasonal variation, cyclical variation, irregular or random variation. These are the things I have explained in detail. In examination, you will be asked a theory question regarding all these things. So watch the first introduction part. You can be able to understand and you can write in your own words regarding this time series analysis. Then starting the problems videos, 1, 2, 3, 4, totally nearly 10 to 12 videos are uploaded. So starting videos, we have done the problems on secular trend. 4 methods are there in secular trend. The 4 methods are freehand method, semi-average method, moving average method, least squares method. Nearly 20 problems I have solved on these 4 methods of calculating secular trend. The next problem I have explained you about parabola, second degree parabola, where y is equal to a plus bx plus cx square. 3 problems I have given on this parabola. Next, I have done nearly 10 to 12 problems on that conversion of monthly trend, annual trend into monthly trend. Similarly, shifting the base and conversion problems. These nearly 10-12 problems I have explained you. Lastly, seasonal variations. The seasonal variations are having 4 types. Simple average method, ratio to trend method, ratio to moving average method. Lastly, we have done this link relative method. So totally 18 problems we have done on seasonal variations. So if you watch all these problems, definitely you can get a good command not only to face the examination, but to get the complete command hold on this topic of time series analysis. So if you are satisfied with my lecture, give a like to the video, share my channel in your group, in your friend circle, so that more students can watch these videos and get the command on the subject. And don't forget to subscribe my channel. Apart from this business statistics, I have uploaded so many videos in my channel, in my playlist. So visit the playlist, see so many subjects like financial accounting, advanced accounting, cost accounting, corporate accounting, managerial accounting, business statistics, income tax, financial management, investment management. So many videos I have uploaded. Select your concerned subject, select the video, watch the video. Definitely you will benefit a lot from this channel. Okay, see you again in the next video on the next topic, next subject.